And then my goal here is I see Bitcoin longer term at 200, 300, 500, even $1 million. And that's where I plan to hold that position. Yeah, I do think the earnings will have an impact, mainly because we haven't seen a lot of revisions down yet in the earnings expectations. So what that's telling me is that there could be a lot of misses in the earnings announcements over the next month or so. And that could shock Wall Street. And I think Wall Street was expecting more revisions to the downside. We did see some by names like Target and various other players out there, but it certainly hasn't been robust. And you have to think that's a major hurdle the market has to get over. So I understand why the markets are a little skittish today going into the week when we have bank stocks. We're going to hear from those. Then we're going to get into technology in the next week. But I certainly think that even with bounces, you're still looking at further downside in the S&P as well as the NASDAQ 100. Yeah, so for me, the biggest thing I'm paying attention to right now is the dollar, the DXY. And what we're really seeing is the dollar has just been ripping higher recently, again, sharply higher today, and that's putting pressure on the equity markets. So that's the one kind of wild card here, where you do have these earnings coming out, although again, most earnings, the next week or two is going to be banks mostly, a couple players like I think Netflix, which is next week reporting. But I think it's important to understand that if that dollar starts to pull back, the market could get some bounces in the mix here. But I'm more worried when we get past that. When we get into Apple earnings and Amazon and Microsoft, will they start to tell us that things are slowing down? And that could be a catalyst for some major downside in the market. So that would be in kind of second half of July, maybe towards late July. I do think at least the inflation is going to be peaking here. And I think it's important to recognize we've seen oil fall. Again, it's not that it's down below 100 yet, but it's still off of the recent highs of $124. So I think you see things like that. If you look at the copper chart, copper's had a massive correction. We've seen these big corrections in these commodities that should start to filter in and at least bring the rapid rises in inflation down a little bit. So I think the market's going to like that because that at least tells the Fed, hey, listen, maybe we don't have to continually do 75 basis point hikes. But I think the other side of the coin that is kind of the wild card for the second half of the year here is, why are those commodities falling? Why is oil falling? Is it because we're going into a recession? In which case, that's bad for stocks in that people won't be spending as much money. People won't be buying a new iPhone every year or whatever they're doing, right? And that definitely will have its impact. So I think that, again, there's this fine line right now where the market wants to see the Fed back off from the hikes. And again, you mentioned the meeting later this month. So I think you're going to get 75 basis points, but the idea here is you want the Fed to throw the market a bone and say, hey, we're going to wait to see how these rate hikes have kind of played out for the next couple months, maybe into the midterms, but then also not seeing the economy really flush into a recession. So it is a weird next 6 months. We're going to know a lot by the end of the year. Yeah, so for me, I'm waiting more for the innovation stocks to report, the Apples of the world. And the main reason here is that if you look at bank stocks, and maybe I can flip over to my chart here, but basically we have JP Morgan already with a big sell-off, right? So what this is telling you, the fact that JP Morgan is down, and this is one of the biggest banks, if not the biggest bank, and it's already down from $173 to $112. So that's telling you that their earnings are going to be kind of which again, the market is already anticipating. Now, I do have a big level that I will throw this out to you. So see this level right here, there's a big gap. If price gets down here, this is actually a buying opportunity. So I'm going to be watching earnings very closely. If price falls into this support level, I'll be a buyer of JP Morgan at this point. So just something to watch. But for the most part, because the charts have already fell so dramatically to the downside, I'm definitely in the camp where these most likely won't have a big impact on the market itself, and all eyes are going to be on CPI numbers, the Federal Reserve, and the tech earnings later this month. It is a pretty wild scenario. I will say that I do have it penciled in that the dollar is topping here. So again, I do expect a bounce on the euro. If I show my chart here, I want to show you guys this. This is a pretty cool chart. So if I go to my monthly chart, you can see that there are two significant trend lines that the dollar is now hitting on. And again, number one is this trend line here through these highs, and then this little pivot low here right across. And so I do think the dollar short-term extremely extended. We've had moves like this in the past, but if you look at the size of this move to this move here, it's virtually the same distance now as this to this. So you also have some sort of measured move going on here with consolidation in the middle. So again, think about this. Think about the likelihood here. The dollar is nearing its kind of zenith in the short term. That should give a bounce in the euro. And that's the one, again, as I mentioned, that's the one saving grace for the tech stocks like the NASDAQ, where we could get a little bit of a near-term bounce going into later this month where earnings start to come out. So again, I'm kind of in this position where I'm saying, okay, maybe over the next week or two, you might get a technology bounce, but then watch out once you get into those Apple and Amazon earnings.
Right.
And if we look at the chart here, you can see that basically where it stopped was kind of these little pivot points right here and right here. Yep. So it makes sense that price was going to hit some resistance there. I think also a discounted factor of Bitcoin is the US dollar, and the US dollar screaming higher certainly doesn't help. Now, how much it hurts, that's up in the air, but it certainly isn't like a helpful hand in lifting Bitcoin up. I think if the dollar is topping like I'm thinking in the next couple of weeks and we see the dollar start to come down, that could be the catalyst for a move up and a break above this near-term 21.822 level, where we do get that move up to this 25.5 level. So you're absolutely right. From last week when we talked, I was looking for potential upside to 25.5. I think we are a little higher than we were last week when we talked, but I think for the most part, you're just hovering in this wedge pattern. Look for a break here, and then you should get that move up to 25.5. Now, I will say, if we break the lower trend line, that would start to be concerning for me. Then you have to start looking for potentially a retest of 17.5 down here. Yeah. But right now, this little range here, it's getting tighter and tighter. I would say within the next 5 days, we've got to assume Bitcoin will get squeezed out or one way or the other, either a breakout or a breakdown. My analysis, my probabilities are still favoring the upside to 25.5. So I have two kinds of trades going. One is a swing trade where I'm just trying to play like the breakout, and I'll be looking to take profits at 25.5 and then maybe the next resistance, the rest of it off the table. What you're referring to, Paul, is where I'm looking to accumulate a longer investment strategy or a longer position. And basically what I'm doing is I'm using the technicals coupled with kind of the fear index, right? So I love seeing kind of massive fear and panic in the Bitcoin market. It usually denotes at least a short-term low. And then also looking at the chart, it's about where are the technical levels telling us it's going to go. So if we flip over to the chart here, the reason I bought my first one, which was at 19,000, was just simply that it was now, we had just pierced the 2017 high right here, which was around 19.5. So I picked up just 1/6 of what I wanted to own or what I planned to accumulate. I strongly encourage this tactic because ultimately it saves people a lot of stress. When you go all in at a particular level, it seems very painful when it just drops another few $1,000s or whatever, and you might get swung out. One of the keys about investing is to not allow emotion to make the decision. Every decision you make as an investor or trader should be based on facts, chart facts, whatever it may be, on-chain analysis. But emotion, when you go all in, emotion is going to be a lot higher. So I picked up my first buy at 19, and I'll basically buy every 2,000 to 3,000 down, which will let me buy all the way down sub 10,000 if it gets there. I don't know if it will get there, but I always like to add on the side of caution. I would rather own less Bitcoin and have been cautious and protected my capital than own it all and risk being out of the money and having to stop myself out. So the idea here is every 2,000 to 3,000 down, I'm just going to buy another 1/6 position, allowing me to have a total of 6 total positions that I accumulate. And then my goal here is I see Bitcoin longer term at 200, 300, 500, even $1 million. And that's where I plan to hold that position. Yeah, so I would be long Bitcoin in here, and basically keep your stop just below this trend line. Any sort of daily close below there, I think that gives you a very limited risk trade here. And then the idea is I expect this to curl back up and actually break out and your upside. So the beauty of it is, right, when you're a trader, you want to analyze your risk. So your risk would be from current price at 20,500 to maybe a close below here around 19.5. So you're risking $1,000. If it goes in your direction, you can make as much as about $5,000. So the risk reward there is really nice, 5 to 1. And again, the key is abiding by the exit should it break, right? That's the key.
Yeah.
And then, if it doesn't work out, it doesn't work out. But the odds right now, the odds are favoring this. And again, I think if you look at the DXY chart here, I mean, this is an insane move in the dollar. Yeah. It's not sustainable. And if the dollar does get some sort of corrective move here, that would also be a helping hand to Bitcoin. And again, I'd love to say, oh, there's going to be news on Bitcoin, there's going to be this. But honestly, at this point, it's based on usually the stock market, the dollar. There's a few other factors that Bitcoin's moving on. And it's really a matter of how people feel about taking on risk. So you need to see the dollar relax a little bit here because honestly, it's spooking the markets. It's spooking all the asset markets, including the stock market, because of this dramatic rise in the dollar. The market wants calm. The market wants kind of a steady dollar, not a dollar that's ripping up here.